Jason Katz with me this morning. Reassure me, please, Jason, that stocks are down, but they won't stay down for a long time. Reassure me.
It sounds like every call I've received over the last week.
I'll bet.
So markets like, or in this case, dislike large round numbers, namely $100 a barrel. We do not think this will persist. Look, I know it's cliche. We hate uncertainty. We want to know clarity on when this war will end, when the Straits of Hormuz will open, when oil will retreat back into the 60s. And so investors need not look, say, the next 10 days. They need to look at the next 9 months, because when we get there, then the world's a meaningfully safer place. We take a destabilizing force in Iran and we stabilize it. That will bode very well for the economic environment. We just have to have a little patience.
I see it like this. The moment investors start to think that maybe the oil is going to go through the Straits of Hormuz, the moment investors start to realize that, price of oil comes down and the market rallies.
Coiled spring.
Am I going wrong?
Coiled spring.
That was your expression last week, wasn't it?
No, my expression right now. But I think that will be the case. Look, we're going to still face the same issues that we faced prior to all this in terms of sticky inflation. Will the Fed cut? Will AI eat the world? But this discount that we've just endured in terms of the pullback, a lot of that will be erased in the next, I believe, month.
Okay, well, in a month, you put that kind of time frame on it. That's good. Now, what about interest rates? The Fed's not going to cut rates at this point, are they?
They had a really difficult job prior to all of this, and it just got more complicated. Inflation was sticky, and now we see oil feed through to headline inflation. So they have that on one side of the equation. On the other side, they have AI starting to eat into jobs. They want to save the job market. Kevin Warsh has stepped into a precarious position. I do believe we get a obligation cut, if you will, of 1 and perhaps 2, but that'll be contingent on if oil's below 70 some odd a barrel by the end of the year.
That's the cutoff point, $70 a barrel.
Indeed.
I believe the oil market is pricing the December oil contract at $70 a barrel.
There you go.
So they think it's going to come down at that point, and that would be good for stocks. It would. Jason, thanks a lot. Always good.